Okay, let's get ourselves situated. So as a reminder of where we are in our workshop series and what we're going to cover today, we're here for our second workshop in our 4-workshop series. Our main topic today is financial planning. As we mentioned, Dorothy's here, and Dorothy is a coach, and I've also started to have some coaching sessions as well with some of your organizations. So in addition to our 4 workshops, as you know, everyone will be able to take part in the coaching. If you haven't started coaching yet, I'm sure you've received messages from your coach and you're working on scheduling that. So by the time we meet again, certainly everyone will have their coaching underway. In terms of specifically what we're going to spend the next couple of hours on, if you recall last time, we had a couple of items that we didn't get to cover in our time together. So we'll pick up where we left off last time, take about 10 minutes at the outset today to wrap up those couple of remaining topics around our GAAP financial statements. That'll actually be a really great segue into our main conversation today, which is around financial planning. So we'll talk about our business models. We'll really get into some concepts around budgeting, cost allocations, revenue planning. Also want to acknowledge that some of you might have done the pre-reading. The pre-reading was an article around how financial management reflects your equity values. So we will bring that up along the way as well. So before we get started, I'm just looking in the chat. I don't see any questions, concerns. Reminder along the way, definitely if anything comes up, questions, concerns, comments, technology issues, pop those into the chat. Different folks are monitoring for different things, so we will address those as we go. All righty. Okay, so jumping in, as we mentioned, last time we left off with the topic of GAAP financial statements. This was really for us to be level setting for our whole team, really to have that same understanding around nonprofit financials. We started around this topic with looking at a balance sheet, statement of financial position. Again, high level understanding. We had said the statement of financial position tells us, as of a moment in time, everything we own, all of our assets, everything we owe, all of our liabilities. And we had said that the difference between our everything we own and everyone we owe is our net worth. And that's that tricky concept of net assets that we see down here at the bottom of this balance sheet. We had acknowledged that this concept of net assets or net worth does get tricky. And this is where we start to see the concepts of certain net assets being with donor restrictions, certain being without donor restrictions. This is what we used to call restricted and unrestricted, and now we have these new labels. Where we left off was here on the statement of activities, and this is where we had said that it is on the statement of activities that we can better understand where those net assets originate. So we didn't want to rush through this last time because this is really one of the key concepts. So I'm just going to take a minute and review not yet the numbers, but more the format here of what we're looking at on the statement of activities. Statement of activities also can be called the income statement. We might commonly call it the income statement. We might call it our profit and loss. We might call it our P&L. But we'll notice here at the top, it's for a period of time. So whereas the balance sheet was a moment in time, assets and liabilities, this is a period of time, and it's all of our revenues for that period, our expenses for that period, and then of course the difference between the revenues and the expenses, well, that's our surplus or deficit. So if we look here, third line up from the bottom, the change in net assets, that's our surplus or deficit. So again, a different kind of label, right? Not what we would normally be looking for. We'd look for, income or loss or net income, surplus deficit. We're going to look for this change in net assets. Now we're noticing here that the change in net assets in this first column is circled and it's indicated as being the operating results. So if we look at the different columns then, this is where we start to see this whole first column that is without donor restrictions. So meaning revenue that came in free and clear, right? So without donor restrictions as to either limitation on how you can spend the dollars or limitation on time frame when you can spend. Also, the revenue in the without donor restrictions includes revenue that might have been restricted originally, but then restrictions have been satisfied. So now it can be released, if you will, into this unrestricted or without donor restrictions column. And then we see all our expenses in that first column. And so this is why we really can look at this without donor restrictions column and think of it like our operations. This is where everything happens. And so for this organization, we see they had an operating deficit for this year, right? This organization had about a $153,000 operating deficit. This will be important later on when we talk about budgeting and we talk about our business models and building reserves, things of that nature, right? We also notice here, and we'll take a peek at a moment, that our expenses are grouped by function, right? So we don't see here the natural labels of the expenses. We don't see our expenses listed with labels like salaries or rent or utilities, right? We see them by function here. We're going to see the detail elsewhere. But this is where we really see net assets and how net assets come about. So net assets, or your net worth, that's a balance that's rolling from year to year. Your net assets represent the sum of all your surpluses and all your deficits every year that your organization has been in existence. So this is what we have down here at the bottom of our screen. We're taking this period's surplus or deficit. We're combining it with the equity that we carried forward from the prior year. And then we're coming up with this end of year total for our new net asset number, right? So we're just adding or subtracting surplus or deficit every year to come up with that net asset number. This is what we're going to find on the balance sheet, right? So this is where net assets come from, sum total of all of our surpluses and deficits since the beginning of time. Right, so this is why we say here, it's really an important concept. It makes it also easier to understand where this comes from, right? Where does that come from? Now, in terms of those expenses, right? These expenses here that are listed by function. When I flip the screen, we're going to see lots of numbers, lots of detail. But first, let's look at the format. The numbers are not yet important. So this is the statement of functional expenses, right? And certainly we see all of this detail happening. This is where we see the different kinds of expenses. Right? So this is where we start to see salaries and rent and utilities. And we see all of the detail for all of the programs, right? And also for our overhead. So we'll see management in general, we'll see fundraising. We also can notice that we can start to understand better when we look at the statement of functional expenses, where resources are utilized, right? So not only, where do we spend the most dollars, right? Which program, right? But what kinds of costs, right? What does it really take to do what we do in each of these activities? And so this is really a great segue for our financial planning topic today, because really when we look at this statement of functional expenses, we should say to ourselves, gee, is this really a representation of the way we want to invest our resources, right? So with that, let's jump into the concept of planning. So when we talk about financial planning, really we do want to, have that picture of the functional expenses in our mind, think about the investment of our resources, what it takes to do the work we want to do. And that's really how we get started in financial planning. So I want folks to either in the chat, or you can also just think about this as a self-reflection, not compelled to let us know in the chat, but do you feel like you're a planner? Are you the person who is the first to make plans? You want to know weeks in advance, or are you more, a last minute on the fly kind of person? Yep, and lots of folks are saying, I'm a planner. Usually the folks who are planners come in loud and strong, right? I know I'm a planner. And so we think that this is fun and interesting to think about, because certainly we bring ourselves and our histories to our work, right? And so this also includes bringing certain habits or beliefs around finances, around money, and around financial planning, right? Yep. So definitely, yep, collaborate with great planners. I love that, Kylie, because I think it's also recognizing that, gee, if it's not my thing, whose thing is it? And how do we build this team? We're also going to talk about building a team around planning. So this talking about collaborating with others is just a really great item to mention as well. So why is planning so important? Why are we thinking about these habits that we each have? Well, last time we looked at this graphic when we started out, and we talked about that this is a picture of a financially resilient organization. And we talked about the fact that financially resilient organizations, we notice, have certain values around finances and financial management. Values manifest themselves in practices around financial management. And there are also certain resources that we observe in financially resilient organizations. When we focus in on those practices, it all starts with planning. Right? And so we had mentioned that organizations that get really good at planning build their planning muscle, and then go through this cycle, right, which never ends, of planning, carrying out operations, and then monitoring performance, retooling the plan, right? And there we go, are more financially resilient. Lots of us also might have had experiences where, gee, it's a really heavy lift. Seems like a really onerous task to put the budget together. And then once we do it, we don't want to look at it anymore. It was like a really challenging process. The spreadsheet isn't easy to use, right? And we set it and forget it, right? So that would really be the opposite of what we're talking about. And that this is really a live document when you have a budget, a process that is iterative, and it should be your tool throughout the year. Right. So speaking of your annual budget in that process, when folks hear financial planning, that's usually the first thing that comes to mind. For most of us, we might have various kinds of financial planning happening, but for sure we all have an annual budget. We want to offer some different ways to think about budgeting. Right, so we can think about budgeting as the outcome of a process. We also know that we had options for our pre-work in between session 1 and session 2 for us to look at that budget assessment, budget self-assessment. So if you had opportunity to take a peek at that, you might have some ideas already cooking around your own financial planning process, right? Maybe you had a chance to think about, is this our ideal process, or do we have some room for improvement of our process? It also means our budgeting doesn't start with pulling out a spreadsheet and putting numbers in it, right? So really thinking through, what is my path to get to a well-informed budget? We want to think about the budget as your action plan stated in dollar terms. So this is one of my favorite ways to think about it, because it really starts with the action plan. What do we want to achieve next year? What are our goals programmatically? What are our goals from a financial perspective? Are we trying to build reserves? Do we have some money raised already that we're going to spend next year? So really thinking about the activities, and then we price them out, right? So it's not starting with the dollars. And then, of course, we want our budget to be an expression of our organization's values. So again, even think of that statement of functional expenses. What would it say to someone? Where are the resources invested? Right? Is it in alignment with our values? When it comes to budgets, I also find this to be eye-opening for many folks. Nonprofits have a lot of different budgets, likely all live, valid, all at the same time. For folks who have never worked with nonprofits, I think this also is a little bit surprising, because we can get pretty complicated. And this is also what we want to think about as we step into our budget process. At what level do we want to do our monitoring? At what level is our budgeting and monitoring necessary? Right? Because you'll notice our operating budget is right here, right in the middle, our annual budget, but we have other sorts of planning at a more granular level that we likely need to do. So how does this all fit together? So we'll notice, if we start from the bottom, that we all likely have multiple grant budgets live at any moment in time, meaning we have budgets that are funder approved, that tell us, the way we have promised to spend certain grant dollars. Those grant budgets may or may not be on the same 12-month cycle as our fiscal year, right? So we could have a grant budget That's an 18-month period that falls, maybe our fiscal year falls somewhere in there. We could have a grant budget that's a different 12-month period than our fiscal year, and so forth. So we have these happening. The grant budgets likely inform our program budgets. So we have programs happening. A program might be funded by a couple of grants and some unrestricted dollars, and so forth. So the grant budgets will inform the program budgets. They kind of roll into it. Some organizations have this cash flow or cash budget separate and apart from the annual budget. Not everyone does. Some organizations even have another layer in between. Maybe we have programs, and then maybe we have locations or departments, right? We could have other roll-ups as well. Finally, all of these levels inform and roll up and create this one-year annual operating budget. Right? So really think about, how are we building this budget? Do I see all of these pieces that I need? Because really, they all relate to one another. We likely need to track and monitor and report at all of these different levels. And so it does get really complicated, and this is where the work comes in. Now, above the annual operating budget, we also see a couple of other items. So not every organization, but many organizations have capital budgets or capital plans. They don't need to be fancy, but they're usually a multi-year view. So those would be several years out, really a prioritized list of capital needs for the future. Those also would inform our one-year annual budget, because we'd say, well, if I know I have this major item coming up 3 years from now, how can I plan every year prior so that when I get to that moment where I need those dollars for that capital item, we've already secured those funds. And so use it for planning. And the strategic budget as well, really interesting. Some folks say a long-term strategy without a budget is just a wish. So some folks say that. And I'd say the strategic budget is interesting because you definitely do not want to try and create a strategic budget. And when we say strategic budget, we mean we might have a long-term plan, a long-term strategy. Some documentation, thoughts that help us to understand, what will it take? Broad strokes, big numbers, right? Not as detailed as your operating budget by any means, but will it take 50,000, 100,000, 500,000, right, to enact this strategy, right? What are the kinds of costs, and broad strokes, how much? Right? If we don't know that, how do we know, what we need to build in every year to make this happen? How do we know if it's possible? Right? And of course, this might not even be it, right? We might have scenarios, we might have other things happening. So this is when we talk about budgeting and planning, we know it's really important because it's multidimensional. Right? It's multidimensional, and it's the way that we can also express our plans to folks in our organization and to folks externally. Right? So with all that complexity and thinking about the annual budgeting process, we mentioned it doesn't start with grabbing the spreadsheet then and popping numbers into it. What does it start with? Really starts with assembling that budget team, right? So even when we ask the question, am I a planner? Am I not a planner? This is the beauty in having a team, right? Because they're all going to bring different skill sets. But think about, again, the concept of inclusivity around finance. Think about later on, folks really having to monitor their progress. It's much easier to monitor your progress with a plan that you help to create, right? We have buy-in with the plan. And of course, when it comes to informing the action plan, we want to involve folks who really have insight into what those activities, what those actions will be in the next year. So definitely having a team that includes program folks, includes development team, right? To help us figure out if our goals for revenue are realistic, right? So not just finance, not just executive director. Think about how long this is going to take and really mapping out the activities, but then sharing that plan with the whole team. Also making sure we're building in the time for our internal negotiations. And so it's pretty rare that we would create a first draft budget and that would be ready to go to the board, right? So really thinking about what's the reality of when we need this budget, right? So if I have a June 30th year end, it's not likely that I need the budget on June 30th. What's the reality of when we need this budget? This is like real life. When do I need my budget? Perfect world. Yep, so months before. Yep, maybe April, May. I would say worst case scenario, you need the budget for, excuse me, either the board meeting or the finance committee meeting. That's the last one before your year end. Usually this is our, like, we're backing it up from, you know, maybe finance committee meets in May because maybe the board meets the next week. So if finance committee has to approve, if that is your process, then how long before the meeting do those folks need the budget? So really, like maybe I'm thinking I need this June 30th, maybe I need this, you know, April 30th to be able to give the governing body time to look at it. So this really backs us up. So that's why calendar seems simple, but it starts earlier than we might think. And then finally, right now we're set up here. We have our team, we have our process, we have our timeline. Now we can gather documents. Send documents out to our team, schedule our meetings, build the budget. We notice step 4 includes the concept of a narrative. So not forgetting the words that accompany the numbers. Really, really important. Documenting our assumptions, right? Because if the budget is the action plan stated in dollar terms, we really need to narrate that action plan, right? So the story, the approach to the budget. And then finally, right, once the budget is in place, we cannot forget to build into the plan the really important step of monitoring, right? Because we really want to think about, we want to get into that cycle. Planning, operations, monitoring, and then retooling the plan. Okay. And then as a reminder, there are several items that in this whole budgeting cycle are often overlooked. We covered these in our conversation just now because we talked about we want to make sure our budgeting process is team-based. We always want to hold our organizational values in this process. We don't want to forget about the capital items, right? We want to make sure we build in the time for that internal negotiation, retooling the plan, right, before the budget is final. What about a contingency plan? What about a plan B? I would say from the perspective of a board member, I often have a hard time approving a budget without at least some mention of a plan B in the narrative, right? So not building a second budget, but definitely, like, I know the organization team has a plan B in mind, right? You definitely put together a budget by saying, okay, this is what I hope happens. If this doesn't happen, I'll do this, right? Or if this grant doesn't come through, this is how we're going to shift. Definitely folks have these thoughts. I love to see these in the narrative, because to me, that's also the board approving the pivot or the shift if necessary, right? Kind of already starts that conversation. So I love this idea here of the contingency plan, but again, not in a detailed way. Definitely debriefing on the process, right? I feel like all of our processes, especially when they're long, when they're done, we say, oh, we're so happy it's done, but it's always good to reflect back and say, is there anything we want to do different next year? And just note it then, because when next year comes, we'll forget. And then, of course, in a perfect world, we want to make sure this budget gets into our accounting system so we can make the monitoring easy, not doing this by hand. Okay. So noticing in the chat that, let's see. So Monique is saying she shared with one of her team members yesterday. I wish this course was offered earlier. Yes, your budgets are a living and iterative process. Yeah, you know what? This would be also something great to talk about in coaching. Yes, because we can look to see it's never too late. We can totally, even as we said, debrief now that the process is over, right? We went through the budget process. Great. Now we have some new information. We may not totally have that top of mind when we're doing the 24 budget, right? So even documenting that now, and then we can apply it next year or along the way. Yeah, that sounds great. Makes total sense. So that was a lot around budgeting and planning. So just want to take a breath, pause. Folks have any comments, questions, because we're going to, I think, do a fun breakout room activity around a budget. But before we do that, can we see the screen for the, yep, happy to put the screen back up. Also wanting to remind folks that these materials and other goodies that we might have to share with folks are available in advance, usually 2 days in advance, on the website that when Monica sends out the registration link, the website is there. So we have these materials also, and they don't go away. They'll, even the session 1 stuff is still there for folks to download. Okay. Oh, and thanks, Monica. Okay. So if nothing is coming up for folks right now, have no fear. You always reserve the right to jump in, ask a question, comment at any moment in time. But we're going to go into random breakout rooms. So this is not going to be an activity with your team, but you'll have the opportunity to chat with folks from different organizations. Now, with the breakout groups being random, maybe you end up with one of your team members, but we shall see. So groups of 3 or 4, we're going to be in those rooms for 15 minutes. During that time, and Joshua is going to also drop into our chat a PDF. The PDF is going to have a budget that looks like this, right? So you definitely don't have to take a screenshot of this or do anything. This budget's going to be in your handout that's now in our PDF that was just dropped into the chat. And there'll also be some prompts. I'll just briefly describe what we have and what we want to do in our breakout rooms. So the organization in this case study in that has this annual budget has experienced deficits in 3 of the past 5 years. Now, don't worry about writing this down. This is also in your handout, right? But this organization has sustained some deficits. Leadership wants to understand what is going on and how can they reverse this trend of deficits. But every April, when they go into the planning process for their budget, there never seems to be enough information to support cutting back on any particular activity. So they feel like they don't have the information they need to make some good decisions, really to turn this trend around. So also in your handout, there are some prompts that really help us to ask some critical questions around the budget. What we would love for folks to do is discuss this budget in your groups. When we come back, we will take some time to debrief as well. And so in our debrief, you know, if folks have high level 1 or 2 minutes to share of some key items that are takeaways from looking at this budget. We'll also, when we debrief, we'll look at this budget reconfigured in a different way, and we'll see what you all think of it, okay? And thanks, Betsy also put the prompts in the chat if you all find that helpful. So any questions before we are whisked away into our breakout rooms? All right. So we'll see you all. So let's take a few minutes to debrief, just to let folks know, because we're just about at halfway through, that after we debrief, we'll take our 5-minute break. Okay. So I'll just share the screen quickly, but then unshare so we can see each other better. So this was the budget. That is the version 1 that we were looking at and discussing in our breakout rooms. And so happy to hear from a few volunteers who might want to maybe give the highlights from their discussion in their breakout rooms, you know, for a minute or two. What was coming up for folks when you looked at this budget? Is it a clear picture? Does it really tell us about, we'd say, true cost of the programs, any information for decision making? Are there challenges in covering admin costs, things of that nature, anything else that came up? So I can go ahead and stop share so we can see each other better. I can share again if it's helpful, but this might be nice to see all our faces. So anyone have some immediate observations? You can either unmute, you can put it in the chat. If someone raises their hand, I'll try and monitor that too.
I'll just go ahead and note that our group felt that this budget was not telling a full story. That for sure there were some problems here. In particular, actually, I'll just move this so I can take a look at it again.
Yeah, do you want me to share? Is it helpful so folks can see what you're referencing?
If it's helpful to others, sure. But I have it open on my end. So the total projected revenue and expenses totaling 1.3, and the salaries along with the fringe benefits totaling 1.3 was definitely a mismatch, which made a lot of sense that they were running into a deficit because there was no true accounting for what the administrative costs were for these contracts or these contracts programs. That was another question that we had. We couldn't seem to understand what that meant. And Dahlia or Betsy, did you want to jump in and help me out here on what other items that we identified that were wrong with this budget?
Yeah, we were wondering what they actually did, what the company did,
Yep.
how many employees were in each program. Yeah, again, like it's pointed out, the salary and fringe exceeded revenue a bit. Are the programs isolated? Do they work jointly? There was absolutely no funds allotted for marketing or PR. Did rent cover everybody? And it was kind of weird that there was administrative cost was a line item, but then it was also a column. So that kind of was like, why is that? We were a little thrown by that one. And that seems to be where they got the hole in the boat. So.
Yep. Thanks, Betsy.
Sure.
Thank you. Ishmael, I think you have a hand raised. I
do, thank you. Yeah, one of the kind of things we decided to kind of look at more deeply is try to figure out, well, there is a deficit, but how do we know where it's spread? Where is it coming from? Is it each contract that has a deficit? Is it one? Is it two? Is it a particular program, since there's no real way to figure out how much each program is actually costing the agency? So that's kind of where we started off asking questions.
Yep, absolutely. I think I see Vicky also.
Hi, good morning. Well, a couple of things. The revenue is also not split out, so it's impossible to tell where the revenue is coming from and by line item. But also it's not, I mean, I just looked at it like, do we even know what these, I don't even know what these programs are. I don't know whether they're going to continue beyond a year. Where are we in process? All these kinds of things. So you're looking at a budget for these grants, but you have no clue the timing of these grants. And you're also 100% dependent on grants. So, you know, that would have me concerned about the admin and the ability to support the administrative load. But.
Okay, maybe two more folks. I'm not sure who raised their hand first. I see Kylie, Allison, either one of you.
Hi, this is Allie Nato. I'm assuming I'm the Allison you're calling on from Amplify.
Yes.
And just to echo some of the pieces that others had already mentioned, for us too, we didn't wholly appreciate the formatting of having the admin cost column in addition to the row on the bottom. So we actually had quite a bit of discussion around that. And then the other piece too, just in terms of kind of the formatting, when you're looking at this, when you see state contract TRG, state contract MVT, is that the same state agency, if you will? So we were not clear on that. So for example, would it be maybe the same state agency in two different programs? I appreciate the piece about rent, because rent is not, you really can't tell sort of if every contract is benefiting from that space and if rent is split out among all of the different programs and funding streams. But I think that admin cost piece was really the piece that we were honing in on, because the admin cost column, that is not a funding stream, and everything else there is some form of funding source. And so we couldn't really allocate all of those, you know, every single one of those dollars coming in, you know, to an expense that way, because those are admin costs. So that was just, you know, confusing for us.
Absolutely.
Thank you.
Thank you. And Kylie.
I don't have too much to add. We were talking about the admin cost too. And one of the things that would have been more helpful to know, to go back to another point, was, are these multi-year grants? Are they single-year grants? Echo the concerns about diversification of revenue. But to me, it looked, you know, the question is, how are they applying for these grants, and are they including admin costs in those grants appropriately? I think that's a common error sometimes that nonprofits make, right? We've talked about that before, is submitting applications that
For me, I think Kylie is
Looks
frozen.
out here covering just salary and fringe and not those other things. So anyway, it's similar to what other folks are saying.
Great, thank you. So to recap, looks like we have some mixture here of apples and oranges, is the way I think I would summarize what we said, because we know that we have these columns here that look like that they're funding sources or grants. So this looks like, honestly, what we commonly see for organizations putting together as their budget, but we can't tell what programs are what. We also don't know, we don't know what the programs are. We don't know if multiple contracts support one activity or one program. We also don't know the true cost of the programs or the activities. It seems like we only know what will be covered by certain grants. So when we say apples and oranges, even think of the graphic where we had all those different layers of budgets. Seems like we mostly have that most granular layer here. We likely have grant budgets, but then these were not then rolled up where we can see the program budgets. So it's likely that we start with this, but we didn't carry it forward then to see what does it look like if we put it in a program budget format. All right, so definitely hear you. And it seems to me that this admin cost is some kind of a default column for stuff that's not covered by these grants, is what it looks like, right? So this may be, I'm saying maybe, is likely, highly likely to be too small to see on your screen right now, but this is also in your materials. So I'll just describe the format, and if you all are having trouble seeing it, you can also look at it later on your own screen bigger. This is the same organizational budget, but organized in a program budget format. So here we start to understand, you know, we have a total column that is still the same total deficit of over 400,000, but we understand now what programs, right? So counseling, family services, looks like workforce development, right? A few programs here. We then see supporting services, which include management in general and fundraising. We see revenue broken out by the type of revenue. We then see personnel for each programmatic area. For folks that were, you know, wondering what's happening with the rent, who's benefiting from the rent, one of our last line items here is rent, and we see an appropriate allocation of rent to all the programs. So really, this is the view that the organization would want to start with. This tells us, what do we need in addition for dollars in each programmatic area to cover what we're imagining is our best guess of the true cost of each of these programs, right? So it looks like, you know, in the counseling program, we need about $50,000 more to cover all the costs we're estimating in that programmatic area. It looks like family services can cover its own costs with the revenue that we already have budgeted, and so forth. So, you know, this all, you know, we're going to talk after the break about business model. This also is not to say that this organization would take this and do something like ever make a statement, you know, street outreach needs to go because it's losing money, right? That is not what we're saying, but we're saying, gee, now we have some information here to have a conversation. If street outreach is one of the major programmatic activities, core and central to our mission that we always need to do, how do we cover this deficit, right? But we have the information here to talk about. right? So this is also what we mean when we say, again, in those core values, being data informed, using the data to have some conversations, right? So now we can have a good conversation about, what do we need to do? What can our plans be if this is the reality? But at least now we have something that's more valid and can tell us on a programmatic basis. So would this have been more helpful? Right? Now, to get to this, though, likely took the budget that you first looked at. Right? What do we have that's funded from some restricted sources? How does that fit into this? Right? And what do we have left to cover? Right? So it's really that deficit of that 431. It's seeing, all of the places that make up that 431. Right? Okay, so with that, why don't we take our 5-minute break? When we come back, we will jump into this concept of business model that we a little bit just touched upon, and then talk about, how do I know what expenses to put in all of those columns? So we'll really talk about how do we think about building that expense budget. Okay, so see everybody in 5. And look at the nitty-gritty concepts around building the budget, starting with the expense perspective, right? So we started out at this high level, and I know the screen still says break. I'm going to flip it in a second. Started out at the high level talking about financial planning. And we said, well, it starts with our action plan. So talking with our team, our budget team, around what we want to accomplish in the next year. When we get into these conversations, we're going to be talking about our programs. Where do we see that there's need, things of that nature, right? So we're really talking about what activities are we going to do from a mission perspective in the next year. This really ties into this concept of budgeting, because then when we put dollars to those plans, we might get a budget that looks like the one we just looked at for that organization in the case study, right? What if it looks like we have this internal negotiation here, or we need to have some more conversations here, right? We might have some decisions to make. That organization either needed to revise the plans to do things differently to reduce costs, or have some plans to raise some more revenue, right? Or maybe they had a reserve or some other source of dollars to fund that deficit, right? Could have been many ways to address what those numbers were looking like. But either way, I think we can all agree that over the long term, that story that budget was telling of a $400,000 deficit would not be sustainable, right? Budget can't look like that for 20 years and have our organization still be around. So we're really thinking now back to this concept of resilience, financial resilience. One of the resources that was in that resiliency graphic was a sustainable business model, right? So we need a sustainable business model if we're going to be around for many years. So a sustainable business model, right, of course, is focused on our core mission activities, right? And we see mission here in the heart, because it's really thinking about what are those activities that are central to our mission, that regardless of what is happening, we will always conduct. Right? We might also have other kinds of activities that we decide to conduct, but it's really thinking about, right, that focus on what are the things we need to do, always have to do, but then also we need the money as well, right? So this really resonates when we think about the fact that regardless, over the long term, a sustainable business model is one in which we're doing the things we need to do that are in alignment with our mission. We also have the supportive services necessary, right, to lift up and be the scaffolding for our mission work, right? So we have the fundraising that we need. We have the administrative team, the administrative functions that we need. We have all that infrastructure to support the programs. And over the long term, we're able to generate surpluses. It's only when we generate surpluses that we ever can have dollars in reserves, right, over the long term. So this is this concept of a sustainable business model. Now, we might, or I'd say, I'm sure that you're able to really quickly describe to folks your mission, right? So what's your mission statement? We can say that. Most folks don't think about what's my business model statement, right? So mission is going to talk about what we do. Business model is going to talk about how we fund it. How do we fund our mission? That's our business model statement. So have some examples here of a few organizations and what their business model statements might be. So this first organization is a health clinic. And we might say, okay, I think I understand the kinds of services a health clinic might offer. In this business model statement, statement, the key item here to notice is that a business model statement talks about how you fund that mission. So for this health clinic, they talk about the fact that they're a community mental health clinic supported by Medicaid fees and private insurance and supplemented by a variety of other revenue streams, including government contracts, right? So this different spin, it's what I do, but also how I fund it. Similarly, our education reform organization talks about being supported by a few committed individual and foundation donors. And the Neighborhood Multi-Service Agency talks about having a government contract and looks like they have an annual fundraising event and they have business sponsorships. So when we think about our business model statement, it says a lot about the sustainability of an organization. I was treasurer for an organization. I'll give you an example of things that come up for folks once you start to think about your business model statement. So we had about $1 million budget. And if I said to you, you know, we are a nonprofit XYZ, we have about $1 million budget, principally supported by one $800,000 federal grant. That is way different than if I said, we're about a $1 million organization supported by a robust annual fund and several multi-year foundation grants, right? So it says something about our sustainability, and that was the reality of it. We had one grant that was the principal component of our budget. Okay? So really think about, you know, what is your organization's business model? And it's also not that our business model is right or wrong, but it informs other conversations when we're in this planning process. Okay? So if we think about the business model having the components of the revenue that we've described, right? So it talks about how we fund the mission. What are our revenue drivers, if you will? And then on the right-hand side, we also have expense drivers in our business model, right? So what are the major cost drivers. For most of our organizations, the major cost driver is going to be payroll, right? So when we think about what does it take, that's also meaningful, again, even to acknowledge what are the major revenue drivers, what are the major expense drivers, because if we really need to make major changes in our cost structure, it's meaningful to know, well, we're really talking about salaries here. There's a direct relationship then between having to change our structure around our major costs being payroll and impact on the work we're able to do, right? So really think about for your organization, what are the, excuse me, what are the revenue drivers and what are the expense drivers, right? So we start to think about then this concept of resource utilization. What resources do we need? And where will we get those resources? When we categorize expenses then, right, and now we're thinking about on those couple of budget versions that we looked at, we saw things categorized in different ways. One way was not so helpful initially. The second way was a lot more helpful for us to understand where this organization is using resources. So let's really look at and dig into this concept of categorizing expenses in a way that really does help us understand resource utilization. So when it comes to budgeting, and then of course also later actually doing our accounting, we have a few ways that we slice and dice expenses, a few ways we code our costs. We have this concept of natural classification of expenses. Just like the label sounds, it's the nature of what we're paying for. And these are things that are familiar to us when we talk about natural classification, things like salaries, rent, utilities, office supplies. This is the easy part. We know what we're paying for. When it comes to the functions, that is the concept of where were those resources utilized. So the function will classify that expense by type of activity. Expenses all get classified in these two ways. So it's not one or the other, it's both, right? So it could be salary, right? So that's the what. Where were these resources utilized, right? Where do these folks spend their time? Maybe it's fundraising, maybe it's in programs. So the what and then the what for, right? So then just like in that second version of that budget that we looked at, we see the natural classifications here down the side, right? So for this sample operating budget, just looking at expenses, we see various folks in the area of personnel, right? So this organization has these team members, and we also see non-personnel costs, the nature, and then we see the functions, right? So we have two programs, we have management in general, and we have fundraising. Usually these dimensions are easier to understand, right? If we're looking at our own real life organization, right? And we can understand that these exist at the same time. And so we're coding expenses in both of these ways. The natural question though that comes up when we look at this is, how do I know what numbers to put in what columns, right? How do I know how much of the executive director's salary goes across all these columns? How do I know how much rent goes in each of these columns, right? So conceptually we get it, but then in practice, how do I spread this? How do I do this? And so let's add another dimension to this concept of categorizing or classifying expenses. Some expenses are really easy to figure out in terms of where do the numbers go in what column. Those expenses we call specific, right? And so these are expenses that are easily assigned either to one program or one function, or maybe easy to split up because we can observe where those resources go. We know, right? So we might know that the fundraising person's salary all goes to fundraising, right? This is what this person does. This is their role. They don't work in programs, right? We know that supplies bought for a particular program go to that program, or maybe if it's, you know, an invoice that has a mixture of things bought for different programs, excuse me, we understand who bought what and where to code those expenses, so we can identify them. But then we have this whole host of expenses that are shared, right? So this is where this concept of an allocation methodology comes in. And the trick here, and in a minute, we're going to look at allocation methodologies. The trick here is that allocations are imperfect by their nature, right? But we want to try and find a way to spread the shared costs that gives us the best possible picture of true resource utilization. And we want it to be done efficiently, right? So allocations are an efficient way to get the shared costs spread so that when we look at those totals, it makes sense to us that these are where resources are going, right? So when we saw in the version number 2 of that budget that we liked how that rent was spread much better, right? That first version didn't really tell us who's benefiting from this space, right? That second version had everybody sharing in the rent. So to me, that says, well, okay, everyone, all of those programs and the supporting functions are benefiting from that rental payment, everybody sharing the space, right? So we're figuring out a way to do that. So then if we take that same operating budget, we know we had natural expenses, we know we have functions in our columns, but we also then have for this organization, lots of costs that are specific. So this organization was able to figure out where folks are spending their time. So in the area, excuse me, in the area of personnel, the way this organization spread the executive director's salary is based on the way the executive director spends time. And that's the true resource utilization. There's a program director that clearly has equal responsibility over 2 programs, right? Looks like this person's salary is split 50-50 with 2 programs. We have a teacher that works in one program, a teacher that works in another, and so forth, right? So personnel is based on where folks spend time. We have some specific supplies and some other specific expenses, again, where we could identify. But then for this organization, here are some expenses at the bottom where an allocation methodology was applied to spread these shared costs. Okay. So then if we put the pieces all together, we have specific expenses that are specific to program. We have specific expenses that are specific to management and general and fundraising. And then we have expenses that are shared across. The trick here is that if we look at program A as an example, just this first column of numbers on the left, the fact that program A has rent and utilities and office supplies and depreciation in its column, right, means that all of these costs here in program A are program costs necessary for the activities that we're planning to conduct in the next year for program A, right? If this is our next year budget. What we want to try and avoid is folks saying something like, you know, rent is an administrative cost all the time, right? This means that the rent that's in the program A column is a program cost and is necessary for running this program. Okay. This is the complexity. This is where it gets tricky, because this is not the same as saying, I have a grant maybe that covers the costs for program A, and that grant maybe is not going to cover rent. That doesn't mean that the rent is not a program cost. It means that funder won't cover the rent. We need to figure out a different way to cover the rent, but it's still a program cost. So this is usually, and we'll get into this when we talk about operations, this is the tricky part, because this is the complexity that later when we're doing our accounting, we need to track all of these different dimensions. They're all meaningful, but we always want to make sure that we have this view of the true cost and not the view in that first version of our budget, which was just based on what does my grant pay for, right? We need to know, what does it really take, right? What's the true cost? Okay. So either in the chat or just reflecting, when you think about your own budget or true cost of your programs, is there anything, and this is not a trick question, okay? So is there anything that from a practical perspective either seems like, gee, you know, this is really the true cost of our programs, maybe we don't capture it that way, or anything come up for you all when you think of the true cost of your programs, right? Is this something that in your organization you feel like you have a handle on? Is it something that, you know, would be nice to know, but seems like it's really hard to get that information? Things of that nature, because, you know, of course, if we're going to do some financial planning that is useful for many purposes, right? Useful, of course, to know what it's going to take, and then useful also to go out and raise the dollars, right? Lots of purposes. Then, of course, we have to think about what are all the things included in our true cost, right? So happy to hear if things are coming up for folks, or again, also totally fine if that is a self-reflection as well. From a practical perspective, once we start to think about the true cost, what it's going to really take, then we get down to this nitty-gritty concept of the cost allocation method that we started to touch upon. Because in the end, we need to figure out then many of these true costs for our programs and our different activities are shared costs. And so how do I come up with a really efficient allocation methodology? How do we figure out when we're budgeting how we're going to spread those costs, and then when we actually do the accounting, how we're going to spread the costs? So self-reflection. Does your organization have a documented allocation methodology? Right? How do we spread those shared costs? And of course, as we mentioned, the answer is likely not that we want to spread the shared costs in a way that matches our grants or the way that matches a funder reimbursement. Right? It may not be the same thing. It's often likely not the same thing. So when it comes to allocation methods, right? If you're thinking about, well, how do we want to spread these shared costs? What are the options? We have several options. And it's really for each organization to evaluate the options, select the allocation method that for your organization most efficiently helps you to get the numbers in the columns that in the end produces a result that makes sense to you. It's logical. Once I've spread these shared costs, you know, intuitively, if program A is your biggest program, where there's the most activity, where you know you spend the most, is that what this result is telling me, right? So we have some choices here when it comes to allocation methods. This is a visual representation of what folks commonly call the FTE methodology or full-time equivalent methodology. There's also another methodology that's similar but different, that is percent of salary dollars. But both of these methods, either FTE or percent of salary dollars, is an allocation method whereby non-personnel costs would be spread in a same proportion or in some relationship to the way folks spend their time. So meaning, in this representation, more folks spend their time on program B than in any other function or area in this organization. So then program B would receive more of the shared costs, right? If there's a relationship to more folks working in an activity to more resource utilization. Okay. Fundraising would receive the least in this allocation methodology. Okay, so we have some options here, either FTE approach or percent of salary dollars that use personnel as the basis for allocating non-personnel costs. A lot of folks use this method for many of the shared costs. Usually, however, we have more than one allocation methodology in an organization. The second most common, right, would be something that intuitively makes sense to most of us, this option of, you know, allocating certain costs by square footage or space utilization. So this is typically how we would spread those costs around occupancy, right? So that spread or shared rent that we saw was likely spread using the square footage, right? Who's using the space? If I'm using half the space, I'm getting half the rent. Right, so usually we have two methods at least for cost allocations for most organizations. Also wanted to mention that some organizations use a different methodology. We've seen some organizations use this idea of spreading costs by participant. I've seen this work really well in things like summer camps, where there's a per camper cost. And so we're allocating costs to different, we'd say, sessions for camp based on how many campers we have. Right, so some kinds of programs lend themselves very well to a per participant cost. So this could be another option, right? But the message is, we have options here around cost allocations. We want to find the one that makes sense for what we're doing, is efficient to apply, and then we do this consistently, right? We consistently apply it. This will help us understand then the true cost of each of our activities. Now we have that information that was in that, you know, version 2 of that budget. This more readily helps us to have the conversations. That first version, not as helpful. And so this is what we want to try to avoid. Okay. So just checking in to see how folks are doing any questions, comments, concerns before we move on to talking about revenue? Because really, once we figure out what do we think it's going to really take, then the trick is how will we fund it? Right? And so, yes, we typically suggest starting with the expense side when we're budgeting, but then it's really, really hard not to think of the revenue at the same time. Right? So before we jump into revenue, anything coming up for folks? Okay, so why don't we move ahead to revenue? When we talk about business model, right? We were talking about business model and we said we had revenue drivers. Well, regardless as to our revenue drivers, there exists various sources of revenue for our organizations. The first four here from the left, individual contributions, foundations, corporations, government even, right? These are all contributed revenue sources, right? So we could have contributed revenue from a variety of donors or kinds of donors. We know there are implications to our business model depending on where we have concentration when it comes to contributed revenue. Because again, if I said, in my business model statement that I'm principally government grant funded, that's meaningful. That's also different than saying I'm principally funded by a wide variety of foundation grants and a really robust annual fund, right? Or maybe a really big fundraising event every year, right? So think about the implications on what it takes to raise each of those kinds of revenue. This also comes up in particular when folks are having these conversations around the budget and how am I going to fund my budget? And we have ideas of diversifying revenue, right? So maybe we are principally government funded, but we want to try and change it up, right? We want to try and supplement that. And so think about the investment in resources that might take to raise a different kind of revenue stream. So this helps us to really think about that there are pros and cons to each of these four contributed revenue sources, right? They function in different ways. It takes a different skill set to raise these different kinds of revenue sources. There are implications around compliance, right? So really thinking about if we're going to make a change, right? Or we want to diversify, how do we do that? How long will it take? And what is the ramp up period? What are the resources we need? The fifth item here, all the way to the left, the earned revenue, well, this is our program fees, right? This is where we have a program and we're charging participants, things of that nature. And of course, when it comes to that revenue stream, we're really thinking about what's the volume of our activities. The earned revenue though, or think about it like your program revenue, this is where we really see the need to understand the cost of these activities, because this is the consideration of what do I need to charge a participant? If the participant charges are not going to cover the full cost of my activities, right? Then what do I need to supplement? So this is how we can understand that we do need to know the true cost of the activities. Even when we think about the revenue, we need to know how much we're going to have to cover here. Now, there's another revenue source not listed here because it's not It's not the go out and get kind of revenue, but an organization can also, of course, have investment income, right? Some organizations might have an endowment, reserves, things of that nature, not listed here, but also a source of dollars to cover your budget if you have that variety as well, right? But these are the only kinds of revenue we could have. We have contributed from a variety of sources. We could have program fees, or we can have some kind of investment income, endowment, or reserve. Only 3 kinds. Okay. We wish we could tell you where to find the money, right? When it comes to budgeting, it's more about, it's not, your budgeting is not about revenue generation, right? The budget cannot raise the revenue for you, but it can give you the information around what revenue do we need, right? How much do we need to cover? And this is for the same organization where we were looking at their expense budget. Here's their revenue budget, right? Here's their revenue planning. So we see our same functions, right? We see our 2 programs, we see management in general, we see fundraising, and then we see, I'm going to say their best guess, but we can talk about this, their best guess for their revenue sources. We see that this organization has some restricted revenue, right? We see a foundation or that looks like they've given dollars for program A. We see 2 foundations who've given dollars for program B. We also see the satisfaction of restrictions in both columns A and B. I want to talk about that. And then we see a bunch of dollars in the fundraising category. So when it comes to budgeting for revenue, we have some decisions to make here around presentation in our budget. This is one of the trickiest things in budgeting, is this concept of, I raised money last year, it was restricted, I didn't use it last year, I'm going to use it this year. I'm going to use it in my new year I'm budgeting for. Where do I show that? Has anyone struggled with this? And why is it so tricky? I'd say this question comes up pretty often because it gets confusing. Yep, the restriction can be time sensitive. It's tricky though, because if we look at this organization up here in revenue, we see satisfaction of restrictions, right? We see 23,000, 14,000. This is the money we're going to use in this year we're budgeting for. But it's not new revenue. It was already revenue in a different year. So the trick is, when we do our accounting, this will not be revenue again, right? We don't have to raise it. We've already raised it. So we just want to be clear, and this budget is clear, and not fall into the trap of commingling the new revenue to be raised with revenue we have already raised, because it gets really confusing then when development folks or folks who are trying to fundraise are trying to figure out, what's my goal? What am I trying to raise? What's my go out and get number? When we're looking at accounting, right? And when we look at our new, if life happened as we budgeted and this organization got 40 grand from the foundation for program A, they would have met that fundraising goal, right? They already fundraised 23,450 in a prior year. It's not going to show up as revenue again though, right? So we just want to be clear and have it clearly state what's new revenue, what was already raised. When we put the pieces together with the expenses, I'll mention one more item that can be confusing, but it's really around the presentation of it, right? Just want it to be transparent. Also, when it comes to the revenue planning, it's a lot about the organization's philosophy or approach to budgeting for revenue. Your organization might say, we're really conservative when it comes to budgeting for revenue. We're not going to budget for revenue unless we are 75% sure, or unless we have it confirmed. That would be really conservative, right? Or, you know, maybe our history has shown we've gotten this grant before. Another organization might say, well, I'm going to budget for a stretch goal. I'm going to budget for a stretch goal. Neither is right or wrong, but it's the approach. This is also where the budget narrative really is important, because we need to know what's the approach. Is it ultra conservative? Is it a stretch goal? For my same organization where we had $1 million budget, right? One federal grant, 800,000. We would love to raise some more individual contributions. We weren't that great at it. It was really hard. Like 25,000 would have been amazing. So one year we had 40,000 individual contributors, right? Major donors in our budget. That was our stretch goal. We knew it was a stretch goal. We knew we might not make it. So we knew we had a contingency plan in our budget, right? So not right or wrong, but need to have the transparency in the revenue budget and understand it in the narrative, okay? So next time we are together, which is in January, we will pick up here and just put these pieces together to see, gee, if I took then that revenue budget and compared it to that expense budget, what's my surplus or deficit for each program, right? Which is, this is the version 2 of that budget that we liked much better. And what does this tell us about plans for the year? How can this organization use this then in their operations, in their planning? Okay, so we will pick up here and have it carry us into our next session. So let's see what we have here as a wrap up. So when folks download these materials from the website, and earlier on, Monica reposted in our chat the link to that website, again, also in her email, you'll be able to get this slide deck. Slide deck always has some handy resources at the tail end here, which includes a reminder of the strongnonprofits.org website, which is a wonderful, handy place with lots of free tools, lots of resources for nonprofits. One of them is the, we call it the Go, No Go tool, but it's a funding opportunity assessment tool, which, speaking of revenue and revenue diversification, it's a good thought-provoking tool that helps folks to evaluate maybe whether they want to go for a new revenue opportunity or not, right? So really to brainstorm and think through, so that we find helpful. But you'll notice there are lots of different categories of information. Also on Strong Nonprofits, which includes info on budgeting, cash flow, operations, things of that nature. One of the tools in the budgeting section is that program-based budget template that we looked at today. And so do check that out if your organization needs a new budget template. This one, has multi-tabs for your programs, things of that nature. And also, we like to give other kinds of thought-provoking information articles as well. So check those out in our resources. But one fun video that we're hoping folks can watch, I think is about 15 minutes between now and when we get together in January, is this one here. It's called Everyone Deserves a Fair Slice. It's a really well done 15-minute video. Some of you might have seen it. A lot of folks who watch it then share it with their boards, things of that nature. It is all around this concept of revenue and the way different revenue sources work, and some of the reality of what happens in nonprofit organizations who might have some different kinds of revenue sources. So check that out. We'll talk about that next time as we round out our revenue topic. And yeah, just invite folks to, before we wrap, think about, are there any takeaways that we want to bring back to our team or bring back to coaching from today's session? We know lots of organizations have coaching coming up in the next couple of weeks. And you may have seen in the chat the link to the quick evaluation. So hope folks have a moment. It would be great, if you're anything like me, once you click off, it's really hard to do even a 5-minute thing that's on your to-do list. So if folks want to take a minute right now and click into the evaluation link in our chat. We really appreciate feedback. We know the foundation does as well. So would love to have folks take a minute and help us out with a quick eval. Okay. So that is our time today. If I do not see you, have a great end of year. Some of you I'll see next week in coaching. And also in this deck, we have all of our contact information. So happy to hear from folks at any point in time. And thanks so much.
Great. Thank you, Gina.